Well, we've got the national harvest numbers, and the trade's taking a close look at this to see what kind of harvest progress was made over this past week. The latest from the USDA and National Ag Statistics Service shows that corn is ahead of the 5-year average on a national basis, 41% now complete. 61% of the soybeans are in the bin, and that is ahead of the 42%. 26% of cotton is now harvested. That's only a point behind the 5-year average. Grain sorghum, 49%. That's ahead of 43% for the 5-year. And peanuts are still running way behind, 28% compared to 42%. Now, in our futures market over here provided by bar chart, we see where corn has been kind of ebbing and flowing here. December now up 1 3/4 at $3.93. March up 3/4, but those deferred contracts are lower. I want to bring in Brian Hoops at this point. Brian, not just the corn market, but the soybeans also have seen this ebb and flow, this back and forth so far here today. Is there anything to that?
Hey, good morning, John. Yeah, we're seeing a lot of strength here in the soybeans today, a little bit in the corn. I think the trade was relieved to see China come back in for the market for soybeans, and we're seeing a good bounce off of that. There had been rumors that they were buying U.S. soybeans, and so we may see additional sales announced tomorrow morning, but that should already be factored into the market by the time those are announced. But, the market's having a real good bounce. Weather's still a concern for South America, but there is forecast for rains in parts of northern Brazil.
Those overnight sales that you mentioned, 420,000 ton of corn going to China and 264,000 ton of soybeans going to China. And Brian, you mentioned the soybean market. Right now on that front month of the soybeans, we're up 11 cents now at 10.55. Got all the way up to 10.58.5 earlier in the day. We've even got the next front month up a dime. And so that goes back to the strength that you were talking about. But the wheat market, kind of weak here today. December, Chicago down 3/4. The Kansas City wheat market, it's 1 3/4 cents lower basically across the board. The Minneapolis wheat market, though, is trying to kind of go a different direction here. What's that all about?
Yeah, we're seeing a lot of spread trade in the wheat futures. There's been dry conditions, of course, through the plains, as you know better than anyone else. It's extremely dry. Wheat producers have not had a lot of rain to get the seed that's been put in the ground out of the ground. But I'm a little surprised we have as much emergence as we have for as dry as it is, and now it's warm and windy. But forecasts for some rain chances are pressuring some of that wheat contracts, and we're seeing unwinding of some spreads between the winter wheat contracts and the Minneapolis spring wheat contract today.
Well, there's parts of western Kansas, eastern Colorado. Well, Jeff Womack was just showing us a drought monitor map there just moments ago, where much of that area really does need a pretty good rain. And in some of those hard red winter wheat areas, they are saying if we don't get a rain here in about the next week and a half to 2 weeks, things could really be in trouble. You still feel pretty good about this grain market as a whole here on the technical stand front?
Yeah, on a technical standpoint, we haven't broken any major support in corn or soybeans. We haven't broken the uptrends that we're in. We just had a little bit of a setback on Monday. As much of profit taking as anything, I think you want to call it. And since then, we started to resume that uptrend. And as you said, no technical damage has really been done to any of the charts.
Mr. Hoops, hang on here with us for just a moment. We've seen some cash cattle trade. I want to talk to you about that next. So we'll do that on the other side of this break here on the Market Day Report. Wednesdays are the day for the Fed Cattle Exchange. Some of the trade watches that just a little bit to get some idea of where cash might trade at. Well, out of 774 head, 671 of them sold. Most of that was at 108, 108.25. So, Brian, my question to you is then, you had mentioned just a moment ago that we saw some trade in Kansas and Texas at 108. Was that above and beyond of what we saw on the Fed Cattle Exchange, or where do we stand?
Yeah, I think all that was reported as being traded came from the Fed Cattle Exchange, and that's where some of the disappointment is lying. Last week they sold, at 108.50. Now they got 108, 108.25, so just a little bit softer than last week's trade on the exchange. A little bit of a disappointment for a market that was looking for a higher cash trade. The show lists were smaller this week, coming into this week, and that had the cash anticipating we'd see strength in the cash markets. And if that's not coming to be, we're starting to see some funds selling, some trade selling in the cattle market. December has broken its uptrend line, and these charts may be starting to roll over with this weaker cash kind of leading the downside for the market.
Well, our futures here provided by bar charts show us that Deese fat cattle market down $1.42 now at 109.80. That goes back to what you were talking about that breaking through that trend line, sharply lower there. November feeders are down 75 at 136.07. January down $1.20. Are we in danger of doing the same thing over here in the feeders?
Yeah, I think the feeders already have. They're a market that I think you can say we're definitely in a downtrending market there, just kind of continuing to bleed lower in here. And that was probably a direct result of the higher corn prices, adding pressure to those feeder cattle market. And now the fat cattle are starting to roll over as well. And that's a disappointment after a market that was looking for stronger cash markets this week.
All right. The hog market, this gap here that we've got staring us down, December's finally starting to come up here between the Deese and the Oct. The December now up 235 at 68.50, the October up 55. What do you read into the charts here?
Well, yesterday they were down and nearly filled that gap that they had left back on October 8th and 7th and 8th time frame. They went down, almost filled that gap completely, and then they turned around and close up near the highs, gapped higher on the opening this morning, haven't really looked back. Stronger cutouts are fueling this market. The discount December is holding to the index. October is going off the board here this week, and in fact today. And so Deese has a job to kind of narrow itself with that index, and it's trying to do that on the strength of the cash markets and the cutout values, which are higher.
If it was going to catch up, though, it probably should have started this a couple of 3 sessions ago. Still has a ways to go. Sure, appreciate it, Brian. All the best to you this afternoon.
Thanks,
Janet,
John.
back to you, ma'am.